Michael, there must have been a lot of bad news priced into these stocks with a reaction like this. Similar story to Walmart, where they lowered their expectations and then came out and beat them. What do you take away from it?
Yeah, absolutely. And hi, Sarah. Thanks for having me on again. Both Best Buy and Walmart now are above where they were when they pre-announced right at the end of July, and in fact have outperformed the market since then. So they did the right thing in terms of pre-announcing. The results today were not good by any stretch, but they were they were no worse and maybe even a little bit better than that pre-announcement. I think the inventory is down 6% was certainly viewed as a positive.
Yeah, how did that happen? Because everybody else's inventories were up like 20, 30%, and especially in categories like electronics.
Yeah, and so you're right. We are seeing inventories up across the board, 20 to 30%. And so Best Buy does stand out in that sense. It's looking a little bit better. I think they were just very aggressive with their promotional activity. We saw that in the gross margins coming down quite a bit, although, no worse than expected. Now, one of the issues, one of the bits of bad news here to temper the enthusiasm is that retail is you don't operate in a vacuum. And as much as Best Buy's inventories look good, their competitors still are over-inventoried in some of their categories. And so Best Buy still expects it to be promotional this holiday season, as do we, because their competitors have too much consumer electronics are going to have to mark that down. Again, the good news, though, is that was already in the expectations. And in fact, their implied fourth quarter guidance shows margins down, but not down quite as much as they were in the second and third quarter, where Best Buy was very aggressive in their markdowns.
So, Michael, how does this stock get to your price target of $110? It doesn't sound like you're particularly enthusiastic about the state of the business right now, with people trading down in categories like TVs and not spending as much on home electronics.
Sure, the business is not good right now, but we do think it bottoms this year. We think they should be able to resume some growth next year, both in terms of the top line and in the margins. We are reassessing our estimates for next year. Although, the results today were pretty much in line, at least in terms of the full year guidance, with what we expected. So not expecting big changes to next year, and we put a 15 multiple against our 2023 number, and that's how we get our price target. That 15 multiple is about in line with Best Buy's historical average. It's still a pretty big discount to the rest of retail.
You cover a lot of these names, Michael. Who do you think? Where do you think the best opportunity is right now, given some of the shifts in the consumer around categories and overall health, given the inflation situation?
Sure, yeah, and so retail in general has outperformed quite nicely the XRT in the back half of the year. If you start the clock at June 30th, of course, underperforming for the full year, but in the second half doing quite well, as a lot of these names have rebounded. One of our favorite names is Ulta. That's a category that has held on quite well, beauty. We saw that last Thursday. They're continuing to do very well, yet still trades at maybe an average multiple, maybe even a little bit less than the average. So that's been a favorite name. We also continue to like BJ's Wholesale. Costco is a tremendous operator, and BJ's has a long way to go to catch up to them, but they're making progress. We like their very basic category mix, so that's been a top name for us as well.